So take a quick turn here. I know I have callers on the line who want to keep talking about the issue, and we'll get back to your calls in just a flash at 866-801-8255. But I really would be remiss if I did not address an issue that is also pressing in all of our communities, and that is an issue of what's happening with the tax controversy and tax reform issues. Because the president made a very big pivot when he talked about this discussion in Springfield, Missouri, while Hurricane Harvey was going on, to show that this was an area of preeminence and we should all be well versed in it. And I want to have somebody on the show right now who's going to give us a quick preview of why we should be concerned about this issue, or what we need to know about the issue. Remember, Congress comes back on Tuesday, and I suspect the tax guns will be ablazing. So welcome to the show at this point in time, E. Martin Davidoff, who is an attorney and CPA. He is nationally recognized as one of the country's leading experts in the IRS representation matters. And for more than 30 years, he has specialized in tax controversy work, IRS problems resolution, individual and corporate taxation, income tax research, and planning. Visit him at taxattorneycpa.com. Welcome to the show, Marty. How are you?
I'm great, Laura. Thank you very much for having me on.
I'm glad that you're here, because this is an issue that the president has been talking about since the campaign trail, and that he teed up the other day without a lot of specifics for people. But I'm wondering, what are you thinking? What will be the sure bet when it comes to what is ever coming in this tax proposal?
Well, there's never a sure bet with taxes. I mean, what you end up when Congress goes to do tax reform is sausage, often, something that you never know what's going to come out. But there are a few things that you can know about, and some of the ideas. So let me tell you a few of the things that are on the agenda, and then what you can do. I'll give you some ideas of what to do, even if they don't end up doing exactly what's being proposed now. So the first thing is that they're looking to take tax rates, the top two tax rates, 39.6% and 35%, down to 33%. But this only affects people who are making over $400,000. So for most of the country, this is not an impact. But if you are in those brackets and you're earning high dollars, then you want to reduce your income this year in 17 and push it to 18, where your taxes might be less, because I don't think there's going to be any legislation that will change the 17 laws. I think this is all looking to 18 and beyond. That's the first.
That's right. So, and that impacts not most of us, but what are the other things that may impact the great masses, if you will?
Well, the great masses, they're talking about increasing the standard deduction by doubling it. The standard deduction is the deduction you get from your income that they then apply the tax rate. And the standard deduction ranges from $6,350 to those who are single and married filing separately, to $12,700 to married couples. So for those people, if they double the standard deduction, those who are taking the standard deduction are going to get a tax cut. Those who are itemizing the deduction may not need to itemize anymore. They'll get that benefit. So if you have, for example, if they double from $12,700 to $25,400, and you've been itemizing at $18,000 a year, you're going to try to accelerate your itemized deductions into 17 under the old law, so that when the new law comes into effect, you don't have wasted deductions. So that's something for normal people who are itemizing but don't have huge itemized deductions. They can be looking at doing some year-end planning this year, and you'll have till December to do that, so you can see what Congress does before you do that. And I have a couple of other ideas about that too.
Well, that's amazing. You think about the planning of it and how it's going to impact the average American and what we can do. You think oftentimes that we're in a very reactive position when you are the taxpayer, and you're kind of at the mercy of the bureaucratic grind that's happening, and wondering what can we actually do, and do we have any role in being able to be proactive? And you have other suggestions of how we can be proactive.
That's true. And, one of the things on any of this, you have to kind of run the numbers, because the law is very complex. They have something called the alternative minimum tax. Many middle-class taxpayers, upper-middle-class taxpayers are being hit by that. One of the proposals is to eliminate the AMT. But if you're doing some planning in 17, and one of the deductions you could accelerate into 17 could be state real estate taxes on your property, state income taxes. If you pay estimates, you can accelerate them to 17. But if you accelerate too much, it will trigger the AMT in 17 and you get wasted deduction. So you got to be careful about that. As far as if you're running a business, the president is talking about dropping taxes on business, both corporate taxes, which is going to help the large corporations, but he's also talking about having taxes, and this has been very vague, about reducing taxes on the little guy running small businesses. Now, even if that's just a possibility, what you would do in 17 is you might accelerate, making some capital investments. You might do things that would reduce your income in 17, where the tax rate is likely to be higher, and push it to 18, where it might be lower.
So I'm glad you mentioned the corporate tax rates is one thing. That's been a point of contention that a lot of the different media outlets are talking about, and I'm trying to understand what it really means and how we can look at it. The current corporate tax rate is what, like 35%, and they're talking about getting it down to 15%. Well, is that really going to be beneficial, and who would that benefit and why?
Well, again, the corporate tax rate, who would it benefit? Well, it's going to benefit those who invest in public companies, for sure, and those who operate in larger corporations. It's not going to, and it may have the residual effect of by reducing tax rates on corporations, they may invest more. I don't think it's going to impact the average person very much. And I don't think they're going to get down to 15%. If they do any progress, those reading the tea leaves are saying maybe they'll get down to 25%. There is going to be some pay for, though. For example, the corporations are going to have to be deemed to repatriate their profits overseas and pay a tax on it. But these are, again, a lot of these are up in the air. And the fact is, I don't personally see that they're going to do a dramatic rate from 35 to 15%. I think just you'll have too many winners and losers. In order to reduce the tax that much, it's really just going to hurt the middle class more or reduce government spending too much. And I don't see that that's going to take place. I'm
talking here to E. Martin Davidoff. We call Marty here on the show. He's an attorney and CPA and a nationally recognized one of the country's leading experts in IRS representation matters. You can go to his website at www.taxattorneycpa.com. Marty, before I let you go, I got to ask you, you mentioned about the possibility of this and being up in the air. A lot of what's been talked about, I know there haven't been specifics that are sufficient for us to really, dig our teeth fully into what's going to be happening. But what are the possibilities it's going to actually pass both houses of Congress, whatever tax reform is looming?
I'm going to give you two things. One is I think there'll be something. I don't think it's going to be dramatic, but I think there will be some changes. One of the things that has been talked about, which will impact your callers, are family issues. The president has said that he wants to help families in the middle class with taking care of children, but there are no specifics yet. I think there'll be some legislation. I don't think it'll be dramatic. I think there's too much of a split in the Republican Party, and I believe that there may be a few small business issues and family issues that may come through, and they may then use the repatriation of money from overseas to pay for that. So I think there'll be something. I don't think it'll be dramatic, and I think it will provide some benefit to some people.
Well, Marty, we're all kind of waiting on bated breath. I'm glad that you were here to give some expertise. Hope you come back and break it down for us again as we actually kind of try to figure out what is really going to happen. We have these sort of vague statements about the need for tax reform, and we'll see when you get back down to the brass tacks what actually happens. So thank you for joining the show today, Marty. Have a wonderful weekend. I hope you're safe all Labor Day long.
Thank you very much. I'm here in Montana visiting my grandchildren. I'm looking forward to it.
Oh, wonderful. Hi, and bye, Montana. We have an audience from there as well. So hello, Montana. I've never been, but I hope it's nice. Tom Cruise has a home out there, I hear. So there you go. Enjoy.
Have a great day.
Thank you. You too.
Bye-bye.
I want to thank him for joining the show. It's always important for us to be 10 steps ahead. That's one of my goals here using this platform on SiriusXM Urban View, channel 126. I want to make sure that we have an opportunity that people are learning about things and they're able to really assess what's important in your lives and the priorities. You're not just hearing the soundbite version on television. You're understanding a little more how it impacts you and I as the average Joes of this America. So thank him for joining the show.